Hello viewers, my name is Sunday. Today on this channel, we are looking at some top NABTEB Economics questions. Please go along with me. They are essay questions. Let's see the first one. The number of bad oranges, X, in basket of equal number of oranges picked in a farm are, these are the bad oranges. Okay, so let's see. Using that table of the list of those bad oranges, the first question, form a frequency distribution of the data. 2, form the cumulative frequency distribution. And B, we're expected to construct the histogram and frequency polygon of the distribution. I believe you have a foundation on this. This is the frequency table. In the frequency table, you have the X, which is the number of oranges, how many times 0 appeared in the data given in the table, 6 times. How many times 1 appeared? 8 times. And how many times 2 appeared? 6 times. In case you want to get to know how I got to this table, you can see. Let's count number of 0. From the first line, we have 1, 2, 3, 4, 5, 6. 0 appears 6 times. Let's see 1. 1, 2, 3, 4, 5, 6, 7, 8. 1 appeared 8 times. Let's see 2. 1, 2, 3, 4, 5, 6. 2 appeared 6 times. Okay? In this order, we'll come to this table you can see here. Now, so the frequency is the number of occurrence of that particular data, right? So we have the frequency table. That is answer to the first A1. This answer, you have just presented the table. From that data, you have created the table, frequency table. Okay? Now, from this frequency table, you are expected to form a cumulative frequency. All right? The cumulative frequency, believing you have the understanding, from the first 0, we have 6. Then 6 plus 8 gives us 14. 14 plus 6 gives us 20. 6 plus 5 gives us 20 plus 5 gives us 25. And then 25 plus 3 gives us what? 28. And 28 plus 2 gives us what? 30. So this is the cumulative frequency. The part B asks us to use that frequency table to draw an histogram and, of course, a frequency polygon. All right? Now we plot our frequency on the left-hand side as vertical. And we plot our data, which is oranges, as the X, horizontal. All right? And you can see the labeling as we have it in the table we created, frequency table we created. Okay? These particular numbers, 1, 2, 3, 4, 5, 6, 7, 8, are supposed to appear here, alternate under my frequency table. But it's here. For now, let's manage it for now here. But it's supposed to be here. That's the right place it's supposed to be. Now, we plot the frequency against the oranges. That is X. Okay? In this order. When it was 0, how many 0 do we have from our question up there? If you check our table up there, you can see from X here we have 0. How many 0 appear? 6 times. So we plot 0 against 6, plot 1 against 8, 2 against 6, 3 against 5, 4 against 3, and 5 against 2 in that order. That's exactly what you're going to see here now. So we're plotting 0 now. 0 appeared 6 times. So this is 0. It appeared 6 times. You can see. 1 appeared 8 times. You can see. 2 appeared 6 times. And 3 appeared 5 times. 4 appeared 4 times. And the rest you can see. Okay? Now, after plotting this, we draw our histogram. And for you to now draw frequency polygon. Frequency polygon is you drawing line at the midpoint of the histogram. The midpoint of the histogram. Just join them together. Just get your ruler and your pencil. Draw line to join the center of each of the histogram to get your frequency polygon. Just simple as that. So we have done with number 1A and B. We'll go to the number 2 question. Question 2. The following data relate to a closed economy of a country where all production takes place. in two firms. There are two firms. Use the information in the table to answer the questions that follow. Once you see these two firms, your mind should go to PPC, Production Possibility Curve, where whatever resources you have and raw materials, you either use it for the production of a particular product or for another product. So we have these two firms, and we have the items here: sales, raw materials, labor cost, depreciation, and profit. All right? For firm A, we have total sales to be $200,000. For firm B, we have $400,000. There's also a kind of error here. This should be 400, 160, 60, 40, and of course, we have the last one there, 140. Okay? It should be in this order, 60, 40, 140. All right? So from this table, we have the following questions. Which of the items listed above is an intermediate input? An intermediate input is an input that is in process, is in transit. It has not gotten to the final stage. So an idea should tell you exactly what I'm talking about here. Among all these, which of the items is intermediate? The input that is still in process, is still in the process of transformation, changing. Okay? I'm sure you should know the answer should be raw materials. But let's go on. What happens to intermediate input in the calculation of the national income? So let's see what we have here now as we move to the next, to the answers. So for answer to A, the intermediate input, of course, from the above is the raw materials, because raw material is still going through the process of production to be turned toward output of finished goods. Okay? Now, the intermediate input are not counted when calculating national income. Why? Because they are not static. Today, they are raw materials, tomorrow they turn to finished goods. So we have to what? Flow, at the short run, remove them in the process of calculating the national income. So for the B side, so this answer to A. For the B side, so we should calculate total amount of depreciation of the country. Remember depreciation, that is the loss in the capitals, the loss in the machineries, the degradation in those fixed assets as they are being used for production processes. So in calculating depreciation, we have it in the table. We can check the table up there. Let's check the table up there. Now, depreciation is stated for firm A is 16, and firm B, I think is, this should be 60, 40, 140. Okay? So let's see. For firm A and firm B, let's put them together and check down there. Let's check down there and confirm exactly what you are saying. Okay? So for firm A, we have $16,000, and for firm B, we have $40,000 in the depreciation as stated in the table above. So when you put it together, we have $56,000. Okay? Now, the second question asks us, in the second question, we should calculate the net domestic product. Remember, anytime you see the word net under national income, net is telling you that the total GDP or GNP, either GDP or GNP, minus depreciation. In other words, remove depreciation from the total you got, and then you get your net at the end of the day. It's just like when you are paid salary and you ask, what is your net pay? Your net pay is your gross minus all the deductions. Maybe your tax, maybe your pension, and what have you. And when they are deducted, you get your net. The same thing happens when you are calculating national income. So to calculate the NDP, we have NDP equals what? The GDP, the gross domestic product, minus the depreciation. If you look up, the total product says from this table, for firm A is $200,000, firm B is $400,000. So when you put it together, we have $600,000. Okay? So let's see. $600,000 as the total sales. Okay? Now, we will now less depreciation. We just calculated our depreciation for firm A and for firm B. We'll put it together, minus 56,000. So total net, our net is $544,000. Our net is of the national income is $544,000. Okay. Let's check the next question. I hope you're enjoying this class. Please subscribe to this channel so that you get more from us. Now, the third question here. Remember, we are checking on NABTEB major questions, okay, on economics. Distinguish between division of labor and specialization. You know, anytime question comes on this subject, it's always between this and this. Why? When there's division of labor, eventually at the long run, to lead to what? Specialization. So what is division of labor? It's talking about to break down production process. There's a production to be done, there's a process to be undertaken. You break them down into units, into separate operations, such that different persons or different employees undertake different sections of that particular production process. At the end of the day, we are going to lead to specialization, because when you keep doing a particular thing for a long time, what happens? You become specialized in that particular job, okay? So division of labor is that there's a job to be done, we'll break it down into smaller units, and we'll make different employees to take charge of different sections of that production processes. That's division of labor. Specialization is when you concentrate all your productive efforts in the production of a particular product, particularly a product that you have the highest comparative advantage. When you notice that you are much more better in producing a particular product, then you concentrate all your available resources on that particular product, because you have what? The highest possible comparative advantage. That is specialization. Okay? The second question here says, explain 3 factors which limit the importance of division of labor in production activity. Of course, everybody agreed that division of labor is very important when you talk about production process. But there are some limiting factors that may not allow this division of labor to function perfectly well in the course of production activity. The first of them is the extent of demand of that product. How many people in the market are looking out for this particular product? How many are interested in that particular product in the market? We also determine the much more you are going to produce. 2, how capable is the manager, the entrepreneur? Ability to manage available resources, efficiency, and effectively to get the best product. 3, the nature of the product. What is the satisfaction, utility that the product is giving out? So who is going to enjoy at the end of the day? It's also very important on division of labor. Then how efficient, like I mentioned earlier, how efficient and effective are we able to distribute the available resources? We also go a long way to determine how effective the labor will be. And also the distribution channel. How do we distribute when we are finished production? How do we distribute the channel? Okay? It's also very important. And then availability of labor. You cannot divide labor much more than what you have. Okay? It is the number of available labor that determine how you are going to break them into smaller units. The next question here says, explain the following concept using appropriate examples. Anyway, in our previous session, if you can scroll through this channel, you see that we have discussed opportunity cost and scarcity in details. When we say opportunity cost, we are talking about the foregone alternative. The best, it's better to even say the best foregone alternative. Why? Because you could have as many alternatives that have been foregone. But the one we are talking about now, the more we are putting emphasis on is the best alternative. Okay? In other words, the sacrifice you made for your satisfaction. The sacrifice you made for your satisfaction. And we have a very practical example I gave in this place. Let's look at it together from my answer here. Opportunity cost is the best alternative, like I said earlier, because there could be many alternatives. But the best alternative, want, that is sacrifice in order to satisfy another want. Why must you sacrifice other wants or a particular one for another? Because of the problem in economics called what? Scarcity of resources. Okay? For example, if a farmer utilizes his limited resources to produce cocoa instead of yams, okay? So the choice he has made is cocoa. And the opportunity cost, which was foregone, is what? Is the yam. He had made choice to produce more or only cocoa, using all his land, all his resources to produce cocoa. The yam he couldn't produce is the opportunity cost. So he has sacrificed yam for the production of cocoa. That takes us to what? Scarcity. Scarcity means inadequate supply. Sometimes it's very funny to me when I hear people use the word scarce in the general balance or general market. Some people believe that scarce is when something is not available. And I used to correct people. For instance, somebody wants to get a particular product in the supermarket and they went to the first one, the second one, the third one, they forgot it. They will say that product is very scarce. That is not that is not true. Okay? When we talk about scarcity in economics, we are talking about the inadequate supply. When something is not enough, it's available, but it's not enough to go around the number of people that are interested in getting them. Okay? So that is meaning of scarcity. When money is not enough, which is the major problem facing production, scarcity of resources. When goods or services are not enough. When productive time are not enough. Okay? All these are called limited in supply. They are available, but they are not enough. They are scarcity. They are scarce. For instance, we have a practical example I give to you right here. A student may be in need of a pair of shoes and, of course, a textbook on economics. The pair of shoes costs 1,000 naira. The textbook also costs what? 1,000 naira. So if the student has a total sum of 1,200, by so doing, his 1,200 is limited compared to the two items he's interested in. You want to buy a pair of shoes, you want to buy a textbook. Two of them for 1,000. That's 2,000 naira. But you have what? 1,200. So you cannot be able, with these available resources, you cannot purchase the two items at the same time. So what is he going to do? The only thing he has to do is to buy one of them and leave the other one for another time. So if the student chooses to buy the textbook, maybe it's pressing to him or her at the moment, what has he done? He has sacrificed the shoe to satisfy the book. So the best alternative forgone is the shoe left unbought, while the choice, the satisfaction, is the textbook. And this, he has to sacrifice this because there is inadequate supply of resources at her disposal, as at the time she needed two of them. As at the time. Time is a factor. We must not underrate that. Time is a factor. Okay? If we look up in the question, the questions ask us, with the aid of a diagram, explain the PPC. I mentioned this when I was introducing the question earlier, that when we say PPC, production possibility curve, that means you have two products to be produced. But based on the available resources, you cannot afford to produce two of them, maybe at a larger quantity. You have to produce one or leave the other, or produce more of one and less of the other. So let's see, as we move down, production possibility curve is a graph that shows various combinations of two commodities. Remember, various combinations. Like I said, you could produce more of A and less of B. Or you could produce only A and none of B. Okay, these are options that are available to the producer that can be produced with a given resources at a given level of technology. So let's see in the table. We have a table here, right here. All right. So this is PPC, production possibility curve. Okay. There are interpretations to be made about this. There are movements along this curve. From Y to M or M to Y, from M to N, and from N down to X and thereabout. Okay. There's also a particular figure. This Q was supposed to be somewhere here, which is inside the box. Okay. This means this particular resources is underutilized. This is full utilization along the curve, but this is anything below is underutilization. I gave interpretation down here. Let's look down and see. From that, I think you saw the curve, right? So now, from that curve, the production possibility curve above shows the various combinations of product X and Y, okay, that can be produced with given resources. Production combination can either be OX or Y3. In other words, from here to here, or from here to up there in the curve. If you are seeing the curve, you can check the curve after my explanation. All right? The movement along the curve, like I said earlier, okay, either from M to N and thereabout. The movement along the curve means production of more of one commodity and less of others. I just demonstrated it to you now when I use that arrow to explain it. Okay, it means you produce more of a particular product and less of the other. But that's the movement along this curve, MN, movement along this curve. So the more of N, the less of N. The more of N, the less of M. Let's go on and see more interpretation on this. Okay, point V is unattainable because of limited resources, while point Q is underutilization. I mentioned earlier that this point Q down here is under the curve. Anything under the curve is underutilized, not fully utilized. But anything above or outside the curve, let's see as we move down a bit and check. Like point V is outside the curve. Okay, it means unattainable. It's not reachable, unattainable. Anything along this curve, just note three things. One, any point above the curve, outside the curve is unattainable. Take note of that. And curves along the curve, they are what? Full utilization of resources. And any point inside or under the curve is called underutilization of available resources. Okay? When I say something is underutilized, which means they are not fully engaged. They are not fully engaged. So production possibility curve can be used to explain economic concept of scarcity, of choice, of opportunity cost, and of economic development. All right? I hope you enjoyed this interpretation. Please continue with us on this channel, and in case you have any questions, you can drop them. We'll attend to them with time. Question 5. Explain the term industrialization. What is industrialization? That's the meaning. B. Examine the role of industrialization in the economic development of Nigeria. So this is just a very simple and direct question. Any layman can give interpretation to this, but let's look at it together. Industrialization is the process of increasing the volume of productive activities, and development of technology so as to increase the economic welfare of the people. If you note, what is industrialization? It's a process. In this process, what are we doing? We are increasing. Okay? What are we increasing? One, the productive activities. And two, we are also developing our technology. As long as we are increasing productive activity and we are developing our technology, of course, we expect that the economy will develop. The economy will increase. The volume of the economy will increase. And once it increases, what happens to the people who are the ultimate users? The people will benefit from it. There will be what? A better living standard, well-being of the people. Okay? It involves development of agriculture, mining, manufacturing, commercial, construction, energy sector of the economy with the aim of what? Increasing economic well-being. Well-being, not just of the people, also of the country. Okay? If you notice, every aspect is being mentioned here of the economy, so as well to make it a macro and general economic increases. All right? So, B, examine the role of industrialization in the economic development of Nigeria. In other words, what are the functions, duties, contributions of industrialization to development of the economy in Nigeria? Let's see them down here. Okay? One, we have provision of employment opportunity. When there are more industries, the primary and the major thing, the first thing that will happen is that there will be more employment. More people will be employed. Two, there will be diversification of the economy in such that we will not just depend on only one major source of income as we have in Nigeria today. You know, in Nigeria today, 75% of our income comes from what? From crude oil. Crude oil. A country cannot develop just, solely depending on a particular product. So we need to diversify, looking at other sectors of the economy so as to improve the economy sector. Three, improve the balance of payment of Nigeria. Okay? When we industrialize, what will happen? We produce more. When we produce more, what happens? We sell more out. And when we sell out, we earn money. As we are earning, the implication is that our exports has increased, so our income has also increased. So we are going to have a favorable balance of payment. It will also help the government to increase their revenue. They earn more money as they produce more goods. The market also become enlarged, particularly for agricultural products. For instance, if there are many, plantations, cocoa plantation, palm plantation, cassava plantation, planted everywhere across the 36 states of Nigeria. What happened? There will be more production of food. Agricultural products will enlarge, will increase, okay, and there will be more markets. And when we eat and eat, we start selling out and still make more money from neighboring countries. What again does industrialization do for us? It increases our foreign exchange earning. When we produce more goods, we're able to earn. As we earn more, our economy is boosted and become better. It's also increased standard of living because as we produce more, we have more to consume. We have more to utilize. We depend more on local produced goods than imported ones. So the standard of living of the people will increase. It will also improve the technical skill of our workers because as international enlarge, there will be more room for division of labor. There will be specialization. So the skills of our laborers, the workers, will also increase and improve. Then, of course, at the end of the day, we have increasing outputs. All right? Now, the next question here says, what is money? What is money? Money has a general interpretation. It is what? Anything that's generally acceptable as what? A medium of exchange and settlement of debts. It's a medium of making payment in any society. Now, but I like this question. This question is thought-provoking. It's asking for your own thought. Okay? It said, will you include all or any of the following under the heading of money? Will you say they are money? Will you say all these are money? Give your answers. How do you give your answer? By interpreting or telling us the meaning of each one of these. Checks, postal order, banknotes, coins, and bank deposits. All these are near money. They are not actual money, but they are near money. When I say near money, because some people may accept them, some may not. For instance, if you have payment to make to somebody, if you tell the person, I'm going to issue a check, some people don't want check. Some don't want check because some are afraid the check will bounce. You understand? So they are near money. Are you there? They are not actual money, but they are near money. But they are also medium of what? Of settlement of debt and payment and transaction of businesses. All right? But I'm expecting even those who have said this question to put another one called transfer, which is the major thing we all do now. Transfer. Okay? That is online transfer and the rest of them. So now check. A check is near money. Right? Though, like I said earlier, it's not everybody accepts it. Some don't. Some older people don't like to accept a check. And some other business guys, they prefer that they see their money that catch, or you transfer it and you confirm it. Like I said, I wish they put transfer because that's the most common one we're using right now. Okay? Postal orders. It's also a near money. It's not money on its own. Then banknote. When you say banknote, these are the money in the bank. Paper money. Then coins is opposite. Metal. Unfortunately for us now, all the coins in Nigeria are gone. We used to have 1 kobo, 2 kobo, 10 kobo, 5 kobo, but all of them are gone. Unfortunately, they are gone now. All right? Even I was just talking to somebody yesterday. I said, there's a particular note that's disappearing in our markets now. There was 5 naira note. It's going now. Hardly will you see 5 naira note outside there because hardly could you see something you can buy. So it's also disappearing. Maybe in the next 5 years now, 10 years, 5 naira note will also be out of circulation. Okay? Even now, 10 naira is very scarce in the economy. It's very scarce. You buy things, you need to get change. People start looking for 10 naira here and there. You can see that's part of inflation, So all these 1 kobo, 2 kobo, 10 kobo, they're all gone. They are gone. They're no longer existing again. Though they are still legal tender. When you look by the law, under central bank, they are still legal tender in Nigeria. But how many persons? Where will you get? I have some that I kept for future purpose. I just kept it for my own future purpose. So that when children grow up, grandchildren grow up, you can show it to them. This is what we used to spend our own days. Even the old currency notes, I still have some of them. I just kept them as an archive. Or when I teach economics like this, I can show them for students who don't know when but I've changed the colors over and over and over again. You understand? Okay? So bank deposit, this is the money in current account of a commercial bank. This money can be demanded. It's also a demand money. If your money is current account, you can demand for the money at any point in time. Okay, so the bank must make your money available as far as the current account is withdrawable, particularly by check. Okay, if you go for savings account, let me tell you a story. I entered one of the bank, it's about 2 or 3 months ago, and I told them a particular amount I want to withdraw. They say, we're sorry, please, you can't afford to give you as much as that for now. That we have to give you a lesser amount. it was shocking. My money. But they said they don't have enough cash in the bank. That's part of the issues going on in Nigeria today. So all these are near money. They're not actually money, but they are near money. Some may accept them, some may not. Okay? But money itself is legally acceptable. That is the legal tender, cash and coins. Cash and coin, the note and the coin. Let's go on to the next question. A demand curve slopes downward from left to right. Discuss two reasons why this is the case. A demand curve slopes down. In one of our sessions, if we can go and check some of our videos we have sent earlier, I did a deep explanation between movements along demand curve and shifts in demand curve. Okay? If you check those videos, they can give you a deeper explanation of this particular question. But to save our time, let's see the answers prepared for this particular question. Okay? The normal demand curve slopes downward from left to right. This implies that the greater the demand, that is, the higher the price, the lower the quantity demanded, and the lower the price, the greater the quantity demanded. This is simple, the law of demand. The higher the price, the lower the quantity demanded, and the lower the price, the greater the quantity demanded. In other words, price is a major factor that brings about change in quantity demand of any particular product. So that's what it's saying. Okay, so the relationship between price and quantity demanded for a particular product is inverse. It's inverse. That means it's inverse, not direct. It's indirectly proportional. Okay, while one is going up, the other is coming down. While one is coming down, the other is going up. That's meant by inverse. Okay, now we're asked in that second question to, can we check the question again? It said, discuss two reasons why this is the case. Now, why is this the case? Remember, this law of demand. One, income effect. Income effect is the more you earn, the more it seems to want to spend or buy. All right? Then what about substitution effects? There's always alternative goods you may want to buy. At that point, if you see an alternative, a substitution to a particular preference, you notice that the demand for that preference will go down and the other one will go up. The law of marginal utility. Okay? It's also another, the more and more you consume of a particular product, the less and less satisfaction you derive. That's the meaning of marginal utility. For instance, if you are thirsty, the first bottle of Coca-Cola you take, you enjoy yourself as if you are just in heaven, okay? By the time you take the second bottle, the third one, you notice that your satisfaction for that particular Coca-Cola will be going down. That's the law of marginal utility. So these three major points brought about that particular question. Okay, I think there was another question up there. I thought, okay, this answer to A, yes. Suggest three possibility to this rule. Okay, that's what we just did now. The three possibility. Okay, let's see. Let's see now. Let's see the other questions. So look at the three possibilities I just mentioned now. The income effects. The decrease in price of a commodity increases the real income of the consumer. Okay, when the price is going down, it means that your income has increased. You can buy more and more of it. All right, like I explained earlier. I think I've done this explanation. Now, in the B part of this question, let's see the B part of this question. The B part says suggest three possibility to this rule. What are the possibilities to this rule? Okay, exceptional demand. When consumer behaves contrary to the law of the higher the price, the higher the quantity demanded, we have an exceptional demand curve. Examples of abnormal demand. Now, which product can you still remember that we have abnormal demand curve or exceptional demand? One of them is called ostentatious goods. Ostentatious goods. Ostentatious goods are goods that people believe that the higher the price, the more the value they possess. And by so doing, they buy more of that product at higher price. This was also explained in one of our videos sent earlier. Okay, for instance, talk about jewelries, gold, all right, even vehicles. all these products, all these commodity, yes, people tend to buy more of them at higher price because they believe that the more the price, the more value they portray, and then they go for them. Okay? So let's see the next one now. Let's see the next factor as we move down here. All right? The demand for luxuries. I just mentioned that now. The expensive cars and the rest of them. A fear of future rise in price. Now, people may buy a product at higher price, at increased price, if they are afraid that tomorrow again the price will go up. I have a very practical one in fuel, petrol in Nigeria. Now, the petrol is being sold between some stations. You have 890, some 920, some 900. Okay, if the price should go to 950 now, you will see people rush to fuel stations to do what? To fill their tank, because in Nigeria, before you see by tomorrow, by next tomorrow, it can lead to 1,000, and before you see it 1,200. Okay, that is fear of future rise in the price of that product. Okay, it makes the demand to also what? Increase. When there's a perfectly demand, when nothing is demanded, with a very slight increase in the price. And our little increase in price, nothing is demanded. That means the demand for that product is perfectly elastic. Any change in price will bring about what? Reactions from the consumers. Such also can also bring about this factor. Okay? All right. Let's see the next question. I hope you're enjoying. All these curves are just to interpret what I just explained now. All these curves, they interpret what I just explained now. All right? This is an abnormal demand curve. When you see a curve, a demand curve that looks like supply curve, this is an abnormal demand curve. So most of the time, the curve for ostentatious, the demand curve for ostentatious products are always like this, which shows the higher price, the higher demand, as against the law of demand in economics. All right? Very well. And this is perfectly elastic demand. Perfectly elastic demand. Okay? For a product that any change in price, there will be drastic change in the quantity demanded. It's horizontal. Oh, sorry, it's vertical. It's vertical. Okay? Why this is perfectly inelastic? That is, it does not change. No matter what happens to the price, it does not change. The demand does not change. Okay? You can't say because the price of salt has gone down, so you are going to eat more salt. Then you are seeking for trouble, more sugar. Then you are looking for more sickness to your system. Okay, so such products, they are perfectly, let's move on and see. They are perfectly elastic demand or inelastic demand. Inelastic demand, okay? All right. Oh, I think we have done enough for those demand and the curves. Now let's see the next question. I hope you're enjoying this session. Please do well to subscribe to our channel for more. All right? What is a cooperative society? Discuss 3 types of cooperative society that can be found in Nigeria. When we say cooperative society, you'll be surprised to know that a cooperative society is also an example of a business organization. Okay? But in this case, there are people who put their resources together. Why? To protect themselves and to promote the economic interests. They put their resources together for what? To protect themselves and also promote what? Their economic interests. So it's a business organization. I belong to one cooperative society also. Okay? So let's see the types. We have different types of cooperative society. Let's see. We have the consumers cooperative society. In this case, this is very common in many workplaces, many offices. At the end of the month, when salary is being paid, the workers put their salaries together and they buy in bulk, bag of rice, cartons of turkeys and chickens and fish, cartons of milk, cartons of provisions and what have you. Okay, they buy all these things in bulk and they will come to the office and share according to how much each has contributed to that. Those people that are able to get 5, those are able to get 10, those are able to get whatsoever, according to the money contributed to that pool, will be shared for themselves. Some do their own at the end of the year. Okay? But I know in the office where they do every month. There are some places they do at the end of the year. Okay? As salary is being earned, some people, everybody will give according to what you want to buy. And then when they buy all these things in bulk, why did they do this? When they buy in bulk from wholesalers, they buy at a good price. They buy at a good price. so as to not share among their members to encourage them. Okay? Let's see the next type. The next type is producers cooperative society. This one is very common among the farmers. I've seen this one severally among the farmers, where they come together, like farmers, they want to cultivate their land. They will come together, put their resources together as a group, a cooperative, and they will go and hire machineries, either for tractors for cultivation, or tractor for clearing of their bush, or tractor for planting. No, they just do that because one person may not be able to have resources to hire such machineries. So they put their resources together to do that. And sometimes need to buy fertilizers for their products. They also do that too. So they can buy at a good price from the government and then they share among themselves. Okay? The next one is credit and thrift cooperative society. This is where I belong. In this one, the members are encouraged to save. As you collect salary, you save some portion of your salary at the end of the month. And anytime you are in need of money, what do? You apply for loan. And what they do here, most of the time, they give some cooperative give you ×2. For instance, if you have saved up to 50,000 naira, you can apply for 100,000. But a lot of cooperative can give maybe 3 times. That is 50 times 3, 150,000, based on your ability to produce a guarantor among members who could fill the balance that you are not able to make from your own personal money. At the end of the year, expectedly, they share among themselves dividends. Because as these loans are being taken, going in and out, more money are being created. Profit are being made from interest. So at the end of the day, they share interest, particularly when they do their AGM, annual general meeting. And after the account has been audited, because there's a group under government that supervises cooperative society. Okay? So after they have audited your account and you want to do your AGM, you declare your profit and you declare your dividends. Dividend is a portion of the profit that has been shared among all the members that make up the cooperative society. Okay? Let's see the next question. What is money supply? And discuss 5 instruments used by central bank to control money supply. Money supply is talking about the total money, either notes, coins, or deposits that are available in a particular economy at a particular time. The total amount of money. This money could be in notes, cash, could be in coins. This time, and I don't want to start mentioning coins because coins is no longer existing in Nigeria economy at the moment. Okay, though it's still a legal tender, but I'm not sure it's in circulation. Bank deposits that are available for the use in a particular economy at a particular time. We call it supply of money or money supply. Okay? Remember that central bank control the total money circulation. Right? So central bank have different policies they can put in place to control money. They can do what they call bank discount rates. They can do open market operation, liquidity ratio, special deposit. Like this special deposit, this Nigerian central bank use this severally all the time. When they notice there's too much of money in circulation, inflation, what they do is that they will now increase special deposits, especially from commercial bank. And because of that, most of the commercial bank will be forced to recapitalize. All right? There's a point they say a bank should have is it 25 billion, okay, as a special deposit. This is money this commercial bank is expected to keep with the central bank, okay? And they don't assess it unless there are issues, there are problems with that particular bank before they can assess that special deposit. There will also be special directives, okay, on monetary policies by the central bank. There will also be funding. They can demand commercial bank to make some funding available so as to reduce the volume of money in the hand of commercial bank. When it's reduced, they also have less to give out to the consumer, to the people outside. Monetization, just advice from the central bank to the commercial bank as a means of also controlling money. For instance, let me give you a particular one. Now, every dirty money in circulation, the central bank severally has advised the commercial bank that when this money gets to commercial bank, they should not let it out again. This money should be brought to the central bank to be discounted for new one. But most of these commercial bank, they just do garbage in, garbage out, right? Mr. A will bring dirty money, Mr. B wants money to give him that dirty money. It's not supposed to be so. That's why you see most of our money in circulation are dirty and stinking. Although this is because we ourselves, we don't know how to handle our money properly. All right? So now, when these money are being converted to new one by central bank to commercial bank, they are being done at a particular discount. And that is the discount commercial bank don't want to pay. And that is why you see them, they return the money as they come to outside. But this is not a good one for us. Though they can't be punished as such, because it's just an advice for good money circulation from central bank to them. I hope you have enjoyed the session so far. So at this point, we'll stop here and we'll continue some other time. Please subscribe to this channel for more on this. And also, if you have any questions, you can drop them. We'll attend to them at time. Thank you.